Hello, everyone, and welcome to this week's live stream. We are doing this live stream after a while, and very happy to have people join in. Um, so we're going to cover what's happening in the markets right now, what's happening with our strategies. Obviously, because we run momentum type strategies, we've seen correction in some of our strategies. We've seen volatility, but the recovery is happening strong. We are extremely confident about how things will go from here, and that's what we are going to talk about in this session. So I have a quick presentation for you, and please do put out all your questions, right, that you might have for me in the chat below, so that as and when we go over it, as and when the live stream presentation is over, we'll go over the questions as well, right? So please put down all your questions on the live stream, and we'll take it up after a small presentation that I have prepared for you. Um, so let me go over the presentation to start with, right? All right. So I have a quick presentation here for you, and the topic that we are sort of covering in this webinar is that the winds are turning in favor of momentum, right? That's what we want to talk to you about. Obviously, like I said, the situation since the first half of the month has not been good for our strategies, and that's not just because of correction in momentum, but also because we have taken some tactical steps to deal with whatever happened in the market, right? But yeah, I think things are looking very bright right now, not because of the macroeconomic condition. Obviously, macros in India are looking good, and even globally, Donald Trump is doing what he's doing, and it will always have an impact. But if you look at the strength of momentum that is there in the Indian stocks, right, among small and mid cap, among the broader market, that gives you an immense amount of confidence on what's going to happen with the market. So that is what we are going to talk about in this session, and then eventually I will talk about what is the along with the trend that is picking up. We'll talk about what's happening with our strategies, where do we see them going, and why we actually think this is a really good time to invest into the type of strategies that we run. So that is the broad topic that I would be covering in this presentation. So first thing that we'll talk about is that there is a strong signal of recovery in the economy, right? This is something that we track at Right Research, which is something that we call the fear and greed index, right? What is the amount of fear and greed in the market? And see, if you have a look at it, you will see that the greed is increasing. I mean, we have been in fear for a very, very long time. I think since April, we have recovered from that fear in a certain sense, but we went deeper into the fear territory for a long time, right? So we're seeing that happen. We're seeing that recovery happen in the Indian economy. We've seen our markets, right? So Nifty has actually recovered beautifully from the lows that it went to after January, and small and mid caps obviously lagged that, and now they are also slowly picking up, right? You're seeing everybody recover beautifully from the correction that happened, right? So that talks to you about the strength. See, essentially, correction like these are worrying, but if these stocks recover fast from those correction, that is when you will see that gives you confidence that fundamentally these stocks are very, very strong. Now, there are other macro signs also. You're seeing consumer confidence pick up. We've got 30 people join in. Nobody from my team has joined in today. I think everybody's enjoying Sunday. So you'll have to bear with me. I will take over your questions. Also, please post it in the chat below. Uh, but yeah, see, what you're saying here is that consumer confidence is picking up. You're seeing consumer confidence, which was at a low, which was sort of declining, is picking up. So that's a positive for the economy. RBI rate cuts, they have come at the right time, right? See, you're seeing what's happening in the US market. Donald Trump is shouting on his head that he wants rate cuts, right? Why does he want rate cuts? Because if the rates are low, they can boost the economy, and if the rate cuts come at a very last stage, right, when the growth has really declined, then it doesn't have a big effect, right? So because the rate cuts have come early for India, that can actually boost growth, right? So people will have more money to borrow to buy real estate. People will have more money, money to borrow at lower rates for their spending. Businesses will have lower rates to, sort of uh, do capex, right? And even infrastructure firms will have more money to borrow to do a lot, right? So which will lead to a lot of economic growth as the rate cuts have come early. Secondly, you're seeing liquidity, obviously because of the rate cuts, but also RBI is doing a lot of things to boost the money supply, right, which is helping the economy. Inflation is at a low, which is very positive, right? You can see that inflation in India right now is at a low, right? It's a multi-year low, which is very good, right? And there are various other signs like obviously FIIs have finally started coming back, right? FIIs selling was a big problem, but now we're seeing FIIs come back and start buying. You're seeing an uptick in FII buying. Obviously, these FIIs that we want to talk about are more directional FIIs. This is not Jane Street. Jane Street saga is something that we have sent you out a newsletter on. You'll see it on our blog also. You've written about it, which is a big shocking thing. I mean, not shocking, obviously, but the amount of manipulation that was done on our market was really shocking, right? That somebody can literally come and manipulate the whole market. That's like criminal, right? That sort of affects the integrity of our market itself, right? So that was something that really did impact or really did shock us. But directionally, you can see Jane Street is only one aspect of FII. There are pension funds, there are large global funds that invest into Indian stocks for long term growth, and you can see those are slowly coming back and investing into the Indian market, which is a big positive. You can also see that the valuations that India has are not scary right now. They are pretty decent. They are at their mean or median, right? And making stocks attractive. And what is also very, very good is that along with this low valuations, earnings have seen an uptick last time. So we'll talk a little bit about earnings also, especially in the universe that we cover, right? See, obviously, first 3 months of the year, people were worried, right? People were worried uh, about the momentum stocks, but the way the earnings came out, the way it impacted the stocks that we have, that was a huge, huge uh, confidence boost for us, right? And especially for the type of stocks that we hold, the earnings were quite exceptional in the last quarter, and we actually expect this quarter to also be standout, which is which will lead to further maybe lowering of the valuation ratios and growth in the prices as well, right? So that's what's giving us confidence. Now another big thing that's happening is the US dollar, right? US dollar has corrected more than 10%, and when US dollar becomes weak, your emerging your equities in the emerging markets become more attractive. So we think that with the US dollar correcting, you will see stocks in India become more attractive for foreign buyers, right? And that is what is actually happening right now. So which is again a big boost. I think Donald Trump is going to keep the dollar index low, right? That's what he wants. He wants American goods to be attractive, right? And that's why he would like to keep the dollar also at a lower level. And I think that will boost emerging economies as well. Like I said, earnings have came out quite exceptional last quarter, right? If you saw, this is a index I track from our friends from Dollar Capital. Here you see the number of downgrades versus upgrades, right? So last two quarters, Q2 FY25, Q3 FY25 were not encouraging, but Q4 FY25, you can see this was pretty encouraging uh, because there was a pickup, right? There was more upgrades than downgrades compared to last two quarters, and this time we expect even better earnings. We've been attending a lot of management calls and listening to management narratives, right? And they talk about a lot of new product coming out, a lot of strong numbers coming up in a number of stocks in the broader economy, right? So we think that this index is going to inch up, which will be pretty good, right? So this is so these are all the positive things that we think are happening in the economy, which at this juncture where there is more uncertainty than there was, let's say, a year ago among investors. I think it would be a good time for people to start buying, start investing into strategy, especially the type of strategies that we run that follow high growth, high momentum stocks. It would be an attractive, proposition to invest into right now. Obviously, one more big thing, there are a lot of positives, but there are uncertainty also. Tariff is something that we are thinking about, but a couple of weeks ago we were all worried about what's happening in Iran, what's happening in Israel. Crude prices were skyrocketing, or really inching up because of the conflict. So that always remains a worry, and I'm sure a lot of questions that will come on the chat will be about geopolitics, how that impacts. uh, but yeah, I think those tensions have come down right now, and we hope that that continues to be the case. Big worry that's coming is in a few days, in 2 3 days, the tariff deadline, the 9th of July deadline for Donald Trump's tariffs is going to come. If you see this, the uncertainty around tariffs have come down. Tariff uncertainty, or the trade uncertainty, was in the world was at a peak earlier, but it has come down. This was, I think, somewhere around March. It has come down, and I think from the narrative that's coming from White House, it seems like they're going to solve a few tariff cases. Not sure how and when that happens, but there is a expectation that this would happen. The tariffs would come down, and uncertainty would come down. Uh, so that is good. We think that in India, obviously, there are only certain segments that get impacted. You will see gems and stones, right, which means jewelry, diamond, etc. That industry is highly impacted because India is there's a lot of manufacturing of jewelry or polishing of diamonds in India, and then we end up exporting them to other geographies like Israel, like other countries, which are further sellers, and that industry would be impacted. It is impacted. Textile as an industry would be impacted because we sell a lot of textile to the global markets. Pharmaceutical is seeing an impact. If you look at a lot of pharma companies, you're seeing corrections because Donald Trump wants to do things on pharma, right? A lot of things he's announced. Then electronics is expected to impact, but electronics may they did not take that call, right? Electronics is a very sensitive thing in today's market. Microchips rule the world, and right now we can see that that is not in the purview of the tariffs. So only limited sectors will see impact. Maybe some of the steel and metals would also see some impact. Chemicals would see impact, but domestic chemicals are actually flourishing right now. India, in fact, is a much lower, much smaller part of global exports to the US. So we see limited impact for us compared to all the other emerging markets, which is a good thing. So we think while tariffs will have an impact, it will hit sentiment if something happens, but things are getting solved, and we don't think that should. I mean, actually, Donald Trump's moves right now tend to be very, very unpredictable. Shock and awe. So I wouldn't say that let's bet. The only thing that you can bet on is volatility, but not a directional movement at this point in time. Now let's talk about something else, which is about our strategies, right? So obviously, I wouldn't say yet that strategy is breaking out for us, but because here I have comparison of our strategies on the PMS with the BSE 500, which is our chosen benchmark, and other more relevant benchmarks, which is like Nifty Momentum Index, Nifty Small and Mid Cap Index, right? Other small and mid cap funds. You would see that things are not looking good for the right research PMS, because we seem to be underperforming our benchmark. We seem to be underperforming our chosen benchmark, which is a small mid cap momentum indices, right? But what I would like to do is sort of explain what is happening here, right, and explain what's going on. See, first thing that you would notice is BSE 500 right now, it is majorly 80% large caps, right? So obviously, did not have as much impact as any fund that is following small mid caps or something that is following a momentum strategy, right? Those have seen slightly larger corrections, right? So BSE 500 has outperformed others for this short period where you're seeing this correction. But but our strategies seem to have done slightly worse off. And that is because what happened was, within our PMS, we ended up doing some risk management, right? After seeing this correction, and right research PMS being a new PMS with a whole volume of investors, after seeing a 20% correction, we actually went and did our risk management. We sold stock, we hedged, and we sort of mitigated all the risk in the month of February, March. So what happened was that while our ideal strategy should have recovered maybe 7-8% more than what has happened right now, the hedging led to some underperformance. So this was like a tactical issue that led to this correction, and the actual hedging was done with the right intention, actually with the right call. But we use the mid cap index to hedge. So when the market, so our hedges expired right before the Trump tariff announcement, so we did not gain from that hedging. But the call was correct, just the instrument was not correct. But yes, I think there's some underperformance due to that risk management. But if you actually think about it, the strategy itself is doing really strong. It's a tactical call that went wrong in this period of high risk, and you have to take it in your stride. And what we have done is we really validated our strategy. We really validated our research. We have actually we're following all of our stocks in terms of their fundamentals, of their earnings, in terms of expectations, and we see very good numbers, which makes us more and more confident about our strategy. So essentially what happened was, many of the stocks that we ended up selling at the bottom, right, is where we lost money. And we've seen that those stocks have come up very beautifully, but because we were hedged in the initial few moments, we've seen a slower recovery from those levels, right? Essentially, if you look at right research strategies, we tend to uh, benchmark ourselves with a momentum benchmark or a mid-range small benchmark. Those are more relevant because, see, at the end of the day, uh, a PMS strategy like ours, right? Right research, what we do is sort of chasing a higher performance, right? That's what we are trying to do, right? That's what we think is the differentiation that we are able to provide. And when we do that, what happens is that the ideal benchmark is a momentum or a mid cap or a small cap, because that's where you're getting higher returns right now, right? And with that, if you look at that, you would see that our strategy tends to beat these benchmark pretty consistently, maybe with a 60-70% run rate. But recently, we've lagged that because of the hedging that we did, or the selling that we did, right? But the nature of the strategy is that historically we've seen us beat these benchmarks, and that is what we hope to see continue going forward as well, right? And some big lessons we have learned, which is something that I put together here, is that equity investing, see, it is all it looks very attractive when the markets are going up, but there will be phases when when the strategy or the stocks, the great businesses that you're holding, correct by 50%. And you can only be a good equity investor if you don't get worried, even though your stock that you're holding corrects by a 50%, right? Similarly, you know, when you think of volatility, when you think of your risk appetite, right? You don't have to think about volatility is a good measure of risk, but you have to understand that risk actually means that sometimes there will be a drawdown, right, which might not impact the business. You have to understand the business and actually have confidence in where you have invested instead of be worried about short term price movements. And that is a lesson that we have learned. That's all we can do. We validated it with a lot of research. We have obviously gotten a lot of wisdom by reading and learning, and that is the thing that we have learned, that the only failure with our strategy that happened was the risk management that did not go through in the best fashion. And what we've learned is that it is criminal to sell a stock that has correct that a good business that has corrected 20% for no reason, right? It is the worst thing that you can do. Now, again, so having said all of that, you can see that the market, we look at the market to go through different phases. There is a phase of contraction, there's a phase of recovery, and there's a phase of expansion, right? So we see that contraction has already happened. When contraction happens, you will see quality stocks do well. So all your large caps, right, they do well with this contraction. In a recovery, you see small and mid cap value stocks do well. And then there can be some slowdown also, which is smaller in nature. But then when the expansion comes, you will see momentum strategies do really well, and that is what I think is the phase where we are right now, right? So that's why we think it's a great time to invest into the type of strategies that we run with our PMS and with our other products. Now I have a few stock examples that I will not go a lot into, but see, essentially, just to give an example here, this is the type of moves that our strategy tries to capture. So I'll just try to maybe talk a little bit about investor psychology here. What happens is many times, see, imagine holding a stock like this, right? And on the day when the stock goes through this big correction, or maybe a week of dip, is when you get a lot of client complaints and queries ki, uh, this stock is doing uh, why don't you intervene and do something or the other with the stock, right? You are a quant strategy, you can sell and you can buy, right? Essentially it's a quant strategy, right? But what we actually want to do with the type of strategies very clearly across the board, all the strategies that are out there from right research, be it in our RA framework, be it in our PMS framework, all we are trying to capture is like moves like this, right? We want, and this move does not come in 2 days, 3 days, 4 days, 5 days, right? You can see it's a matter of 6 months, right? For this particular stock that we have here, and this is what we are going to capture. And in this 6 months, this stock has literally grown, I think, 60%. But there have been phases when you're seeing a lot of downturn. You've seen phases where it goes through correction also. But and because these are not maybe the biggest large cap stocks, so you will see some deviation happen from the index, right? Maybe index in this period was relatively flat, but this stock corrected, so there can be idiosyncratic risk. But what we are trying to capture is these bigger moves, and which requires us to have patience to hold stocks for the longer time. We can't jump. If you have taken conviction in a particular stock, it's unfair for you as an investor to sort of expect us to jump and manage every short-term movement for the stock. So that's something that I just wanted to cover. There are a lot of stocks mentioned that I will not cover here because this is public forum. But we did cover a lot about a lot of our stocks that we're holding, a lot of the earnings that we have seen in our investor presentation that we did last week, which our investors would know. Actually, in terms of the earnings that came out, right? I can't show you that data on a public forum, but most of the stocks that we are holding, right, ended up being some of the top performing stocks in terms of earnings in their whole uh, sector, right, in the last season. Maybe one or two examples I can take, and this is not a recommendation to buy or sell, but I'll just mention maybe a couple of names here. So, for example, pharma sector, you saw a lot of volatility, but the stock called Blue Jet, right? Blue Jet is a stock that came up with exceptional earnings, the best earnings in that sector, and that's something that we've been holding for a long time. Similarly, in the chemical space, we have Coromandel, which is a domestic agrochemical stock that really came out with exceptional earnings. We've seen quite a few agrochemical stocks that have done quite well, which were part of our strategy, right? So I think the earning season has given us a lot of confidence that the type of stock that we're holding are quite strong. I think during the volatility we ended up slightly diversifying our exposure, and I think as the consolidation happens in our diversification, as we become more concentrated and we continue to hold good stocks, the outperformance is bound to come, and that is what we expect from our strategy, right? Now, obviously all that happened, but we've also done some enhancement in our strategy during this correction. And it sounds very childish or very naive for us to say that we had to go and look back at the strategy in a time of volatility. But obviously we did that. Obviously, that's where we heard a lot about new managers and old managers, and obviously that's where the wisdom comes in, right? Somebody who has seen this before, right, didn't have to go and didn't sell, maybe did not sell at the bottom, right, did not get as much worried as we did, right? But that's a lesson that we have learned. We were not worried about a stock, but I think at some point in time, being new and seeing this whole set of client requests come, and media coverage about what's going wrong and stuff like that, became a little bit overwhelming, but we've learned our lessons, and that's all you can do. And we've also gone and looked back at our strategy, right? Because when you're seeing an underperformance, people start doubting you that you're doing something wrong, right? Which is the worst thing that you can hear. And you we did get a few people come and say that is something going wrong. So we've done a lot of research, and we've done validation to make sure and validate that we're not doing it, and find out how we can improve what we are doing. So here, something that we've done is enhance our universe criteria, right? So we put a lot more liquidity constraint. We don't want to go into smaller stocks or very illiquid stocks that can really get battered in times of volatility. We put a lot of volatile risk constraints. We don't want to go to stocks that have a lot of volatility, where the returns are very skewed, where earnings are not stable, where there's excessive turnover that's happening. We also put limitation on valuations, right? So we are not value investors or deep value investors. We will not say that I don't buy stocks above a 20 PE, but we are not buying the stocks that might be the most overvalued in their sector while their growth is not that high, right? So we have those type of checks and balances. Similarly, in terms of quality, we are not buying those stocks that have very low margin or very low ROE but are highly valued. That's those type of filtration criteria we do have in our universe. Similarly, in terms of momentum filters, right? Momentum, people ask us what are the signals that you're looking at or the type of momentum that you look at. We look at a whole bunch of momentum indicators. So you don't just want to look at a long-term momentum or a short-term momentum. You want to look at a combination of short-term and long-term. You want to compare it with the industry. You want to look at the quality of the trend, the skewness of the trend, and breakout confirmation. So we look at all of that, and we have made those signals more robust in our strategy. Similarly, growth prospects, right? How strong is the expected growth? What is the trend of EPS upgrades? What is the analyst rating strength? What is the consistency of upgrades and stuff like that, right? And including all of those, we think makes a strong strategy, and sort of modulating where you invest across the market cycle makes it even more powerful, which is what we're doing. and that is the improvement that we have done in our strategy. I'll maybe talk a little bit about the sectors that are looking attractive to us right now. This is where we are invested in into our strategy. You'll see a lot of finance and electrical equipment, fintech, finance and infrastructure in a sense, and maybe some chemical and pharmaceuticals also. uh, Similarly, even in an alpha fund, that's where you see the allocation happen. And what's encouraging is that if you look at the FII flow, you'll see FII flow seems to be happening in the type of sectors that we hold position in. One being in financial services, capital good, healthcare, etc. Similarly, if you look at the flow coming in, you'll see automobile getting some flow, consumer electronics, and capital goods, which is where we are holding our positions. The sector that we are bullish on right now is one, capital goods, right? You will see capital goods is looking pretty strong right now. Infrastructure spending is picking up, rate cuts have happened, right? So road, railways, etc. Infrastructure is looking good, which will make capital good and industrial good sector to bet on. Similarly, chemicals, I think chemicals are looking pretty good right now, but tariffs will have a role to play there, not just US, but what China does. And the agrochemical cycle you have to watch out for. Monsoons have been good, but these stocks tend to be cyclical, so you have to look at that. Auto and EV, I think this is very interesting. You're seeing this pick up really well right now, and we've taken some bets in the ancillary space across our PMS and across our small cases, right? That has, I think this is a very interesting sector. We think that you have to bet on at this point in time, undervalued and actually breaking out. Financials, banks we've seen pick up right now. Private banks have become undervalued. Your NBFCs are doing well. Insurance companies, even asset managers and the related ecosystem. Obviously, we saw correction after the Jane Street announcement because a lot of counterparties in the market actually benefited from all the excessive trading that Jane Street was doing. So somebody like a BSE, Nuvama, uh, Angel, were actually gaining because of the excessive turnover happening due to Jane Street, right? And those stocks got impacted on Friday. But I think that thing will modulate. I think it's a big positive for the Indian market if a manipulator of such scale has been banned from India. So I think that's a big positive, and I think we expect this sector to do well. Defense, again, it's a great long term bet, right? Because India wants to be a big player in the defense segment, and order books keep on going up and up. But yeah, I think there's been a very sharp rally, and we're seeing consolidation happen right now. So maybe you can take benefit of some correction from these levels to actually build your position in this segment. Consumer discretionary is looking attractive. You're seeing malls and QSRs, and even paints, fashion, jewelry do well. So that would be an attractive segment as well. IT services, I think, because the US growth rate is impacted, it will have some impact on Indian IT. And I think the AI innovation, how well do they adapt to it? It is a bit far off for Indian IT compared to what's happening globally. But I think if the growth rate in the US market are not that low, then that could actually have a positive impact on Indian IT, right? Which could be the case, but we have to watch out for the earnings which are coming soon. That is all I had to cover. I think Siddharth from my team has joined us now. Uh,
Yes,
yes. So now we'll go over the questions that the audience has put into that.
absolutely. Good morning, everybody, and thank you for the presentation, Sonam. We have a bunch of questions. I've collated them, and we'll accordingly try to answer them in this part of the video. Right. So a few investors are asking that what should be the ideal allocation, say in terms of large, mid cap, or small cap, and what is that we follow? Are we flexi cap? Are we specified to any market cap in that sense?
Yeah, that's a very good question, Siddharth. So, see, we don't put a limit. We haven't historically put a limit on small, mid, and large. But recently, in our strategy, we put a limit of 40% on small caps, and mid caps, we want to go as big as, I mean, up to 40%, and large caps also, whatever. There's no limit to it. So we just limited the small cap exposure to be around 40%. I think, and I think, see, the allocation to small, mid, and large totally depends on the type of investor. Somebody who's a high risk investor can actually bet all of his money into small caps, which I've seen many people do it. But ideally, maybe keeping your small and mid cap exposure to 60-70% should be ideal. You should have some large caps in your portfolio also, and small and mid cap are very, you have to be very intensely following the markets, right? So either you go to a good fund that you believe in, which will give you exposure to good small and mid caps, or you have to put in a lot of effort in identifying the right set of stocks to pick in. But you can have a good I think you can have a good 50-60% exposure in a good market to small and mid caps for sure.
Right. Perfect. In the past webinars, you spoke about defensive, offensive, and moving to value investing as well. What has changed since then, and how has the strategy evolved?
So defensive, offensive. See, I think late last year, we were betting on defensive stocks, which means we were just investing into, let's say, consumer sectors, consumer discretionary, consumer retail, etc., etc. More of those segments, right? Maybe some agrochemicals, rural lit segment. That was the and finance, right? Those are the major allocation. You can see that our strategies have themselves evolved, right? So we've added more industrials, right? Industrials are a good chunk of our portfolio right now. We've added we had some defense exposure that we have reduced a little bit right now. We had even had some of these ones, what do you call it, capital goods, etc. So I think right now the economy is showing growth, rate cuts have happened, a lot of good macros. So um, I don't think it's a time to be defensive. I think you can be a little bit aggressive with your allocation. But yes, I think value is something you mentioned. So, valuation, you have to be careful, right? You can't, it's not the most optimistic bull market right now, right? You still have to be careful about valuation, right? If you are buying something that's extremely overvalued, you're going to get a hit, right? So having exit strategy on your stock that have run up quite a bit is important, which is something that we are paying attention to. If something picks up, right? If something goes up 50% in a month, maybe time to be careful, right? So yeah, so that is something that is that you have to work on, and you have to be careful about valuations also.
Right. A bunch of investors are asking that they are considering their investments in PMS, and
Mhm.
but they are confused based on the different options that we have from the PMS vertical itself and the current market conditions. Right. So, what would you advise them? And could you also talk a little bit about the right debt fund that we have on the PMS side?
Okay. So in PMS, yeah, we have uh, three options for you, right? One is our factor fund, which is our flagship, right? It tends to look at a lot of fundamental ratios and fundamental factors along with momentum factors, and chooses a diversified set of stocks, right, which we think can give you a balanced sort of exposure. So that is the most suitable one for most of our investors, or most investors to go in. And then we have a slightly aggressive version of it, which is our alpha fund, which is a high risk momentum strategy, right? So you will only have very concentrated 10 stock bet. The risk would be high, returns would be high, right? So very good for risky markets, but also maybe very good for good markets, but also would have some risk. Typically our investors go to a mix of factor and alpha, and this is a nature that I think something that is to be talked about, that when our alpha strategy is going up and up, everybody wants alpha, and when factor strategy is going up, then people want to sell alpha and go to factor. But I think the idea should be opposite of it, because uh, things are cyclical in nature. But an ideal allocation for the long term would be a mix of a factor strategy and alpha strategy, right? And depends on your risk profile, right? You can go full factor to be moderate, or you can have some exposure to alpha if you want. You mentioned debt strategy also. So we have a debt scheme which is nothing but a mixture of a few debt mutual funds, right? That we think should be ideal. People want to invest into debt market, but they don't know what is the ideal allocation to invest into. So we have a strategy where we have a correct set of debt funds suited for the current environment, which will rebalance also in a very slow basis. So we won't sell these debt funds for a long time, but eventually we will rebalance it also. So we'll manage your debt exposure through our debt fund. So what you can also do is that, let's say you wanted a to reduce your risk, you can have some allocation to our equity fund along with our debt fund in your PMS. That is something that you can do. And also, we also do mutual fund management for some of the clients, which is something to look up at as well.
Right. Perfect. Is there any scope for allocating to international equities or global diversification in the PMS?
See, all we can do with equities is that we would in international equities we can allocate to a few global mutual funds, right, within our PMS, right? We've also time and again bought maybe a Hang Seng ETF or something like that, right? Within our PMS, when we wanted to diversify, right? That would have been interesting, but yeah, I think we take limited exposure to these funds, and I think there are various funds that are present, right?
Right.
The mutual fund houses that people can allocate to.
Right. So I think the structure is limited in terms of the options that we could choose, but there are some options, and we've also chosen them in the past for the PMS strategy, as you mentioned, right?
Right.
Another question: are there any plans to do a Learn app course for the Alpha strategy, like we did for the momentum investing strategy?
So nothing in the plans, but we can definitely go and talk to the learner people if we can do that, right?
Right. Absolutely. And few investors want to know what is the update on the AIF, if we are planning to launch it, and any new products that are coming up that they could potentially look at.
Yes. So in terms of new research, I'll tell you very honestly what we are working on. Obviously, we're working on some improvisation of our existing strategies, right? So what I am working on right now is what is the best time to sell a stock which has run up quite a bit. So those type of research we are sort of incorporating. It's all quantitative in nature, that is happening on the long only side. And then I'm working with, I have an excellent researcher who's working with me, and we're working on our statistical arbitrage strategy that we have been running for a long time for a number of clients. And what we are doing there is, it's a long short strategy using only futures. And now that Jane Street is gone, maybe such strategies will start doing well, right? So it's a long short strategy with futures, where we take a sizable allocation. We also have a few option strategies that now after the SEBI regulations have become clearer on algos, there are various platforms that are coming in where we can offer these algo strategies to clients. So we are also have some of them working. We are working on. Um, and the idea is that in an AIF that we set up, we'll create it as a combination of our long only strategy and a long short strategy. Long short strategy typically, does not give you very high returns, right? It will not give you 50% returns. It will maybe give you 25-30% returns, but at a much lower risk, right? That is what it is. So that is what we are working on, combining long short, long only. We're working on AIF. We're talking to all the counterparties. We're talking to investors where we need them, and the idea is that maybe we'll soon apply, and it takes 3 to 6 months for SEBI to approve it, right? So it's all in the works right now.
Right, absolutely. One more interesting question is, how transparent is the portfolio reporting? Do we share the rationale behind each stock decision?
So we do send out, like, so right now, I think there's a thing that our investors have come back to us and said, Siddharth, you remember that when we started early with very small number of clients, right? Uh, it was very personalized in nature, right? I literally had all the PMS contacts on my phone. You had all of them on your phone. We had a WhatsApp group through which we were chatting. Everybody was very connected. But as the volume increased, right? that became a little bit unmanageable. We had to cut down on the group, and we moved to using Salesforce CRM, through which we are sending newsletters specific with all the detail on all the stocks, right? Specific details on the stocks that we're holding, why we are holding, how are the earnings, etc., etc. To our clients. We have enabled WhatsApp also, where we're sending WhatsApp messages specifically to our clients. And we are sending this bi-weekly, right? So it's not like that every time we buy a stock we're sending a snapshot to our client, but on a bi-weekly basis we send a very informative content around the stocks that we're holding, why we are holding, what are the prospects for those stocks to our clients.
Right. Perfect. And how do we differentiate our PMS? Yes, you
Other
were
thing
saying
to that,
something.
yeah, I think we've done our investor meetup last week, where all for all of our investors.
Yeah.
We've also been doing, me and Siddharth, weekly sort of connects, where we get a small cohort of investors, 20, 50s, 20, 30s investors in one call, and we do address all of their queries together, right?
Right. Yes. So the question that I was asking you was how do we differentiate our PMS strategy from any thematic fund or smart beta ETFs that might be there in the market? And we've seen ETFs coming up in the Indian market as well, right?
Hmm.
So how do
Yeah,
we differentiate ourselves?
a very good question. See, I think two questions you asked. Like, one is thematic, one is smart beta, right? So,
Right.
uh, see, if you were to think of it thematically, we would be most correlated to the momentum theme, right? In terms of theme, right? But but there would be a lot of differentiation from the pure momentum theme also, right? We are using much more fundamental filters and growth filters compared to a simple momentum fund, right? So, and sometimes you will see a highly correlation to a value fund or a quality fund, depending on the type of market. But we are using a mixture of these things, and we are going to a broader universe. So typically, you see from the name of these funds only, Nifty 200 momentum. It's looking at 200 stocks. Some we are looking at a much larger set of stocks, right? Our criteria are much more different, and we expect a higher performance basis of that. So there might be correlation to these funds, but it's differentiated. Second thing you've asked, so in terms of themes, and sometimes you will see that we at one point in time had a lot of defense exposure, so very correlated to defense theme, and then later we are highly correlated to, let's say, the consumer theme or the chemical theme, right? So that changes with time. We are not going to a single theme at any point in time. Second thing you asked about was smart beta. So smart beta, like I said, smart beta tends to be very simply explained, right? In nature, a simple smart beta fund that is published, right, tends to follow 12-month momentum with 1 month lag. It's very well defined set of. It's a very simple set of rules, right? And what we believe is that adding more flavor to it can give you differentiation, better performance, better risk management in various cases, and that is what we try to do with our strategies.
Right. Perfect. Um, a lot of investors want to understand your view and opinion on the Jane Street incident that happened. So if you could talk a little bit about that. Um,
Yeah, I think I did mention in the middle for no reason.
yes.
Maybe I'll talk a little bit about it. I think you know uh,
If for
opportunistic
some
trading.
investors we could cover that, what actually happened and what has been the impact, right?
Right.
Yes.
So yeah, so I'll give you some context, right? See, they're foreign funds, hedge funds, people like us, right? We are not passive. We're not just investing into the index and letting it be. What we try to do is we take opportunistic bet, right? So we will, let's say, we're trying to find momentum picks or value picks in such way that we make higher returns. A high frequency trader or a hedge fund can take more opportunistic bets, right? Sometimes they will buy and sell both sides. They will do very high frequency trading to make profits, right? To There are inefficiencies in the market through which they make profit, right? Which is all fair, right? It's all fair. But what Jane Street actually did was large scale market manipulation. As per SEBI, what they did was that in the morning, what they would do on a typical weekly expiry day, that in the morning, let's say they will artificially inflate the stock prices, right? That they will keep on buying and buying and buying in the morning, so that let's say bank nifty prices are going up, right? And while bank nifty prices, they will take it up, and when the prices are at a peak, they will buy a lot of options, right? Put options, saying ki put options mean that they're betting on those prices to go down, and put option prices would be very cheap when Jane Street has inflated those prices inorganically. And then with the amount of capital that they had, they will sell again the bank nifty, bring down the prices. Their put options will become very valuable, and they will make hundreds of millions of dollars of money from the Indian market, right? Now this is obviously, this is a strategy which has generated a lot of money for them, but this is actually manipulating the integrity of the market itself, right? So if somebody is able to do that, right, then the market itself is not, you know, it's not the market loses integrity. It can be manipulated at such large scale, right? So if something like this, if you think about it, happens in the US market, that person would be in jail, right? Because they actually came and manipulated the market, and it would not be possible in the US market, because US market is much much larger than us. Nobody has that amount of money that they can manipulate that market, right? But because Indian market is small, a foreign player came and was able to manipulate. But see, we are also regulated. We also have SEBI, like US has SEC. So this is a crime in India also, and this party has been penalized. And I think it's a great thing for India that something like this is recognized and penalized, which makes all the participants in India, in the world, know that Indian market is a fair market. It cannot be manipulated. It's not. If a market can be manipulated like that, then it becomes a shitty market. So this gives us a lot of confidence that Indian market is a stable and a fair market, right? So I think this
Right.
is what happened, and it's good that they have been penalized. And it's very unfortunate that somebody with so much resources, so many talented people had to do such type of manipulation, right?
Right, right. Just to keep everything in the interest of time, two last questions, and then we will open it up for some comments from your side and end the webinar. Um, could you comment a little on the right Titan fund or the strategy that we have?
Right. So a right Titan is a large and mid cap fund, right? That tends to follow the quality, uh, as well as low volatility factors, along with some momentum exposure, right? That is what it does. And it tends to be much more stable compared to all our other strategies when the markets are going through a volatile phase, right?
Right. Perfect. Another question. So we have an investor who invests in right momentum, and he tends to put in money every month, right? So he's asking, is it advisable to put the money before a rebalance, after a rebalance? What's your opinion on that?
So you should do it after the rebalance, because that is when you get the new set of stocks, right?
Right. So after the rebalance is advisable in this case.
Yes.
Got it. Perfect. Some last comments from your side, and then probably we could end the webinar.
No, I think no, I had a lot of fun talking to people on a Sunday, because you were not there, so that I was just talking alone. But it was a lot of fun. Thank you everybody for joining us. I think we really appreciate you. I think having this set of people who come and give us their confidence of listening to us uh, gives us a lot of confidence in doing what we do. And we really recognize the power of the community that we have. And we are very happy to engage with you, and you know uh, help you in terms of content or any sort of strategy that you are looking from us. So do let us know in the comments, what you think we can do to better support the community. And thanks a lot for coming on a Sunday. And like I said, it's looking like a very good time to invest into the market, especially in the type of strategy that we have. So I hope I get to come back soon and tell you I told you so. But yeah, I think it's looking like a good time right now.
Right. Thank you for those comments, Sunam, and thank you everybody to all the investors who've joined on a Sunday morning. And any questions that you might have, feel free to put it in the comment box or just write us an email, and our team will be happy to assist you in that regard. Thank you, everybody.
Thanks a lot. Thank you. It's